You're watching an excerpt from How to Make Money in Stocks with Investors Business Daily.
To see full episodes, check out investors.com/investing show or subscribe for free on iTunes. Since we've had a seesaw market for quite some time now, it's not surprising that we've seen a lot of leading stocks form a base-on-base formation. So let's take a look at that pattern, how it works, and how it can give you a second chance to get into a leading stock. Dollar General is one example of a recent base-on-base. The simple rule is, if a stock breaks out, then begins forming a new base before rising at least 20%, then the new pattern and the prior one count as one base-on-base formation. Dollar General broke out of this cup with handle in March, then began forming this flat base before it hit that benchmark gain of 20%. Now, note that the weekly closing prices in the bottom of the flat base were right around the area of resistance the stock hit last summer. That's healthy. It shows that Dollar General is turning a former area of resistance into an area of support as it tries to climb higher. Amazon is another example. It cleared this long second stage consolidation back in April 2015. Then it went into this tight sideways pattern and formed a new flat base. It broke out of that pattern in July and rose as much as 28%. Since it gained more than the 20% that you look for before pulling back, this new consolidation is no longer part of the earlier second stage base-on-base. It's now considered a third stage pattern. Amazon is also a good example of how a base-on-base formation can give you a second chance to buy, either to add to an existing position or to establish a new one. For example, if you missed Amazon's breakout in April 2015, you could have used its base-on-base breakout in July to pick up shares. Fortune Brands Home & Security is another example. It reset the base count in February when this new low undercut the low in the prior pattern. The stock then broke out in March, but pulled back to form a new base before rising 20%. Like we saw with Dollar General, the bottom of Fortune Brands' new pattern was right around a prior area of resistance, and is now testing that area again, which is also right around the 10-week moving average. See if it finds support and manages to break out of this first stage base-on-base. The Tile Shop is another example. We're looking at the daily chart here, but you can see how the stock struggled to gain traction while forming multiple bases since April 2015. Since it never gained more than 20% after each attempted breakout, these three consolidations and its most recent one all count as one first stage base-on-base. Now again, note how Tile Shop also found support in its new base right around where it hit resistance in the prior pattern. A big question now for these stocks and others is, will the general market cooperate and create an environment that makes it easier for growth stocks to make a more sustained climb? As we wait for that question to get resolved, keep an eye on stocks that have strong fundamentals and are forming a base-on-base or other chart pattern, and pay particular attention to those that are turning former areas of resistance into areas of support and are showing market-leading relative price strength.